not be ruled out, and that might continue if 24,900 breaks, and if it closes below those levels in today's trading session or going forward, then Bank Nifty might slip towards 24,600, 24,500 till the expiry, So there can be further 2% cut coming in the Bank Nifty if at all 24,900 breaks. Now the thing is that if the IT sector is further expected to inch towards the levels of 14,200, 14,500 in say a couple of weeks, so we might see say 4 to 5% of move out there. So I think any cut coming in Bank Nifty will be taken care of by the IT, but the remaining sectors too are quite mixed. So the probability of a range bound session at least till the expiry is quite high. However, if it breaks 10,630, which is my target, and I think eventually that should happen, the kind of momentum and the way the stocks have bounced back, and there are a couple of stocks which still are yet to bounce back from the oversold territory. They haven't actually retraced the entire fall which you have seen. So once the entire retracement is over, thereafter only Piyush, we can see some further downside coming in market. Till then, I think market will continue to have support at the lower end. As of now, for this series, it is 10,400 on the broader, I would say on the positional basis. Hence, any dip should be utilized as a buying opportunity.
Jay,
now, strategy as far as the options for this series is concerned, Piyush, I think right.
Yeah, so I just wanted to ask you, and I think you're just coming to that here. My question was, if your bias is intact, that the Nifty should be going toward 10,630, it's just a matter of time here. Maybe because of expiry or moving sideways, we're consolidating. It was 9 to 10 days of consecutive gains, so some consolidation is not bad. Having said that, is it a wise idea to start accumulating long calls here? Because if Nifty is inching higher, is that something which you're comfortable with, or what would be the right idea of spreads, what you'll be playing with here?
I think, Piyush, when the markets are range bound, the strategy should be buying on dips, buying in the lower end of the range and not in the middle of the range. Because what happens is basically, if at all till the expiry time, if you see from the middle of the range, if it shifts towards the lower end of the range and thereafter it moves towards the upper end of the range, then one might not make money, and in fact the options might go worthless. Right, so buying when it falls towards the lower end of the range, that comes to around 485, 490 would be the ideal strategy, I would say. So still, if you get a 50 points cut in Nifty, thereafter you go in buying Nifty 500 calls and selling 10,600 calls. So that is a bull call spread strategy which I would recommend if Nifty falls by 50 points. Right now it is in a no trade zone. Now in a no trade zone, if some aggressive trader really wants to have some strategy, then it would be selling 10,650 calls on the upside and selling 10,450 puts on the lower side and pocket whatever premium you get till then.
Right, so that's the word here, trading sideways, range bound. So it's much better to write to eat premiums here. Once again it goes down, the comfort actually increases here. Jay, another question, Bank Nifty, and in particular looking at the PSU banks here, because again if I look at the data here, it tells me there are shorts again which have been activated in Bank of India, Union Bank, Oriental Bank, some selling happening in SBI also here. So when I look at Bank Nifty, what would be a good idea here? Because Bank Nifty is around 950. It was again falling rapidly, but since the time it has actually entered the zone of 24,900, around 960, 70 again, it is now moving sideways. So what should be a good idea? If somebody wants to venture out on a breakdown or breakout, because we are right at the support levels here, what would be a good idea here?
Yeah, as you rightly said, it is right near the support levels of 24,900. So as I said that if 24,900 breaks, then I think one can short Bank Nifty targeting 24,600, 500 on the lower side. In this series itself, one can see a percent or a percent and a half cut on the lower side. And if it bounce backs from these levels of 24,900, provides a positive close. That's very important. It should close in the positive territory, which we haven't seen since couple of trading sessions. So if at all that happens, if it reverses from these levels, then the aggressive traders can definitely buy 25,000 call and sell 25,200, because breaking 25,200 would also be very difficult till the next expiry. Okay, so that is what's going to happen. If today, if we have a positive close in Bank Nifty, then buy 25,000 call options and sell 25,200. And if it breaks 24,900, one can either buy 24,900 put straight away, naked put, no reason to actually hedge it, or sell naked futures with a stop loss about 25,000. That's the strategy. And one can also have a pair trade, I would say, within the indices. If 24,900 breaks on Bank Nifty, one can sell Bank Nifty futures, and one can also buy Nifty IT futures.
Right, and Jay, also like your view, because if somebody wants to do sort of out of the money option trade here, is it a right idea or not? For example, 24,500 put right now trading around 64 rupees as a premium, 25,500 call again right now trading around 25 rupees here. So a combination would be roughly costing around 90 rupees here. And suppose if somebody is betting, either there's going to be a breakdown or there's going to be a breakout, 200, 300 point bounce either side. Will it be a right idea to actually do this pair trade of out of the money sort of call and a put here?
Out of the call, yeah, when things are quite near to a breakdown or a reversal from those levels, then definitely that long strangle strategy definitely works out. When it is a sideways zone which you are expecting to further continue as that of Nifty, we said that one can write the call and puts, that is short strangle. When a breakout or breakdown is expected, it's a long strangle that one should initiate. And as you rightly said, one can definitely buy. The ideal strategy would be at when Bank Nifty futures are trading around 24,950. So strategy would be buying 25,000 call option, that is 50 points above the current price, and buying 24,900 put options. I think the combination of the same, a long strangle, would definitely add on, or one can definitely get good profits out here. And definitely the loss is also minimum because you are buying the strikes, you're not selling it. So if at all there is a big move coming in next week, or starting from today, one is going to take the advantage of the same and make money.
Right, so that's the word coming on Bank Nifty and Nifty. Again, either side, again, as depends what your conviction is. Again, those were the strategies perhaps, again, that could be deployed here. Nifty, very clear. At present, it's range bound in a broader range here. And Jay was saying that perhaps allow some dips to come, and then again, you can aim for the upside here. And Bank Nifty, again, trading right now near the supports here. So having said that, Jay, what are your topics right now, top strategies at present, which are looking good to you for the day here?
Sure, Piyush. See, I would say I have a couple of long ideas since my bias is still positive. So among the futures, I have a couple of long ideas, and I've got one cash idea as well, that is an equity, non-FNO idea. So coming to the futures idea, I have a buy recommendation on Ashok Leyland. I think Ashok Leyland has been seeing good long build up in this series, and it continues to find support at the lower levels, and it continues to form higher highs. That's something quite positive, and I think that is likely to continue till the expiry. Ashok Leyland in the short term, at least for a day or two, is expected to inch towards the levels of 159. One can buy this with a stop loss of 149. The second buy recommendation would be on India Siemens. Now Siemens pack, since past couple of trading sessions, we have seen a good comeback coming in. Post ACC numbers too, we saw the overall outlook for the sector has also reversed, and the increase in price of the cement too has helped these companies. We are seeing some long build up happening in India Siemens as well, and structurally I would say on the charts it has formed a good inverse head and shoulders pattern, Piyush, and that's a bullish reversal pattern. So this stock is too likely to inch towards the same target as that of Ashok Leyland, that's 159. One can definitely buy India Siemens with a stop loss of 149. The third buy recommendation would be on Infosys. Now TCS is one stock, and which I have been recommending since a couple of months, and recently too I recommended on your channel at around 2800 or 2850, targeting around 3600 on the upside. Traders can continue to hold that, but Infosys now it seems to have completed its consolidation period, and I think now from these levels it is likely to provide a breakout. 1250 is the minimum target, 1140 will be the stop loss, but once it takes off 1250, I think it will inch towards 1350 as well. So this is one stock now among the large cap IT which is going to deliver good returns, at least in this series and going forward in May series as well. And this sector I'm still quite bullish. One non-FNO idea again would be this from the same sector, and that's on Cerebra. Now this stock has taken off with multiple swing resistances. It has provided a breakout from a double bottom pattern. The neckline's resistance earlier was at 62.60. So now that has become support. So hence I would say Cerebra, with the kind of increasing volumes we have seen, a clear buy crossover coming in its momentum indicators with a stop loss of 62, one can definitely buy this for a target of 85 to 90, which is likely to be attained in say a week or so.
Right, so that's the view coming on the IT stocks here. Indeed, today it's the day of IT stocks, where most of the IT stocks